needed to just get a deal done. You don't get to deal 15 without doing deal number 1.
Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of 6, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Mr. Stenziano, doing good. How you doing, bro?
Always making it happen, big man. Today's guest is Reed Goossens. Prior to moving to the U.S. in 2012, Reed was working as a structural engineer in Australia. He started his investing career by buying duplexes in upstate New York. Gino, sound familiar there?
Upstate New York. How upstate from New York? Well, we're going to find out, right, Jake?
We're going to find out in a second. Reed has since formed RSN Property Group, which has a multifamily real estate portfolio of more than 570 units and is under contract for another 296 units. So without further ado, Reed, welcome to the show.
Hey, thanks, Reed. Guys. How are you?
Doing fantastic. Doing fantastic. So I don't know what I want to hear first about the jump from going from engineer to real estate investor, or the move, why coming to the U.S. Specifically for real estate. So why don't you get into that a little bit for us? Yeah,
sure thing. Thanks for having me on the show. I want to just rewind a little bit. So the whole reason I'm in the United States originally is because I'm here for love. My girlfriend, who's now my fiance, we moved here back in 2012. We met when I was backpacking around the world in 2009 in Spain, and she ended up moving to Aussie for some university. And at that period of time in my life, after backpacking, I was like, you know what, I can't be sitting in a cubicle for the rest of my life. And that's when I picked up the little book Rich Dad Poor Dad, and between 2009 and 2011 was just really educating myself on the process of real estate investing and what it really meant. And I got to a point where I thought, you know what, I could pull the trigger here in Australia. I could do maybe a flip or something like that. But there was still a burning desire to move to the United States, particularly New York City, because I'd backpacked through there in 2009. And I just fell in love with that city. It's a city that, you can just feed off its hunger. You think you're doing well in life, and you look across the street and there's a 22-year-old CEO of some sort of Facebook group or something, there's absolutely killing it. So I moved to New York City in early 2012. I think I was on the ground for like less than 2 weeks, and I was at my first real estate networking event, just absorbing what is American real estate. For your listeners out there, the Aussie market and the US market are completely different. The barriers to entry here are a lot lower. So, for all your listeners out there who are sitting on the fence.
And when you say here, you're talking about the US.
Correct. Sorry, yeah. Yes. Talk about in the United States. I do live now full time here in the US. But yeah, for all your listeners out there, if they are sitting on the fence, US real estate in general, because of your population, is very, very the barriers to entry are lower. You got your New York's on one end, and then you got your Detroit's on the other end, and everywhere, and they got 300 or 400 million people in between. So, house in Philadelphia, flip that. Got another one, flipped that, made a bit of money. Still working my day job in New York City. In 2014, I moved to LA because of Erica, my fiance. She's from LA, and I started RSN Property Group, and that was really because I'd sort of run out of my own money, and I needed to start syndicating, and that was really stemmed the jump into large multifamily.
Okay, so
that's a little bit about my background. And
before we get to the real estate. To me, you backpack through the mountains and you hike and things like that. You're backpacking through New York. What do you mean by that?
So
you're not going to hostels and things, right?
Yeah, definitely. I was
That's probably more of an adventure, right, Gino?
Not for me, bro.
20, what was I, 23 years old, and I just finished, I just traveled across the Atlantic Ocean on a super yacht, and I won't get into that. That's a whole other story I'll share with you over a beer. But essentially, I ended up in the Caribbean, and I just backpacked my way up through New York, and Australians love to backpack, and got to New York City, and I was staying in a hostel, and yeah, loved it.
Where in New York were you, upstate New York, were you buying duplexes?
Yeah, so I was buying in Syracuse, New York, and the reason that I was buying there was just because I could drive there. Nothing any more than that. It was more like I'd picked up the book in '09, Rich Dad Poor Dad, and I was educating myself, going to all the RIAs and blah 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 and boot camps, and I got to a point where I was like, look, I just need to pull the trigger. There's only so much reading I can do before actually getting my feet wet and making the mistakes or not making the mistakes, whatever it might be. But I needed to just get a deal done. You don't get to deal 15 without doing deal number 1. So I just sort of just said, let's do this. And it turned out really, really well. And for all your listeners out there, I didn't have any credit when I first moved to the United States. So I had to buy all cash, develop a little bit of credibility with a local bank. And then subsequently, I was able to refi a little bit of the money out and buy a second one and then a third one. And, and over a period of about 18 months, I had about, 3 or 4 little duplexes. Nothing crazy, but enough to cut your teeth and say, hey, I love this. This is awesome. So, yeah, that's sort of a background of me.
So why real estate?
Why real estate? Well, because real estate as an investment vehicle has the four most incredible ways to make money. Amortization, your tenants are paying down your principal of the loan, building equity. You've got cash flow, which I love cash flow. You've got appreciation, and then you've got the I forgot what's the fourth one again. Come on, guys, help me out. There's 4 here.
It's all good, man. You're making it rain here. Tenants are paying for the property for you. I'm in. Sign me up for some of this.
And my friend.
Yeah,
tax benefits. You got it all, man.
That's it. Yeah.
See, I'm the old here, guys. I'm the old guy, so I'm the one who pays the taxes more than you guys. You guys are the millennials here. I'm the Gen X, so I'm the one paying the taxes. So the tax benefit, the tax burden, I feel that pain. So I know I love real estate because of that main reason.
Awesome. Yeah.
So tell us about your first deal and what you learned on the first deal.
The power of going in there and just doing very basic renovations and having, through those basic renovations, being able to increase the rents by $50-$60 a month. And admittedly, it was only on a duplex, but by increasing my cash flow by $120 a month from when I first purchased the property, it was kind of like, wow, this is awesome. And that was really what I'd learned. The other thing I learned very quickly, Section 8, it can be a bit of a hit or miss, and it really comes down to your property management and what are their processes that they have in place to make sure that they're getting the right tenants involved, that there's no sort of butting heads of these Section 8 tenants. So they're the sort of 2 major lessons that I learned, and it was just incredible to as I said, $50,000 you can buy this thing that rents for $1,200, $1,500 a month. It blew my mind, guys. And being an Aussie, you guys should take solace in the fact that you're investing in the right area here in the United States.
Well, that's what I wanted to get into real quick. Can you tell us the difference between, because in the United States, some markets like Boston and Vegas, they have certain barriers to entry. Even New York City with high prices and government regulation. What kind of barriers to entry does Australia have that we don't?
Yeah, so it goes a little bit back to, think of Australia like an LA or a San Fran or a New York. It is, but across the whole country. Like I could not go and find a $50,000 property and that would cash flow for, $1,200 a month. And the reason is because of population, and the reason is because everyone is really landlocked. Australia is a very arid country. We're the same size, I think, excluding Alaska, as the mainland United States, but you can't actually inhabit more than 15% of Australia because it's just desert. So that has a massive impact on it in terms of access to financing. It's a little bit different for larger multifamilies. So there's a lot of reasons why we're having very similar sort of issues like guys in New York and LA, where international buyers are coming in and it's paying whatever might be over asking price just to get their money out of whatever country, particularly China or something like that. And that's really inflating prices to the point where it's unrealistic, and there has to be a correction sometime because it just can't. The difference between wages and what houses cost in those cities, it can't just keep going up. So I'm looking back to Australia as in the next couple of years to think, there's got to be some sort of correction.
What is your investment strategy right now?
Investment strategy right now is completely cash flow orientated. Love enforcing the cap rate theory, NOI. You increase that bad boy, you are going to increase the value of the property. And I just, that's what I'm all about. Flipping. I had a go at flipping a house, but that turned into a day job, and it just became down to relying on the fact that someone will pay me more for the drapes that I put in or the flooring than what I bought it for, and that just didn't resonate with me. What resonates with me is a property that you value cash flow, banks value cash flow, and then I can be in control of my investment because I can force that cash flow.
So how has it changed over the last 5 years, your investment strategy? You've gone from buying little duplexes into big properties. How has that transformation happened?
Yeah, and that's a good question. I think that the major transformation that happened was just like all of us. No one just has a stack load of cash lying around. Maybe you do. That's great. Benefit to you. But it's like, look, yeah, look at the founders of Facebook, of Google, of any sort of major business out there. They used other people's money to scale their business, and real estate's no different. So I just really got to a point where I was looking to try and scale that business quickly, and the way that you could do it, and I'll preface that by saying, well, investing is a team sport. You can't just do it by yourself, and particularly if you want to scale your business. So you've got to bring on partners. You've got to bring on other syndicators. You've got to bring on other people who can raise capital with you or for you or whatever it might be. And we all now start wearing different hats. We've got one of my partners, he finds a deal. Another one, helps with raising money. And another one looks at the PPM and the financing. And we sort of all got our roles and responsibilities. It takes the pressure off us, but it also then allows us to get involved in some larger, really cash flowing deals, a lot more stable than, say, a triplex or a duplex in upstate New York in a very Class C neighborhood.
So can you give us the machinations of how your first big deal went down? I mean, how that first big property? Because I think everybody on the show can figure out, I can maybe do a duplex, triplex, but when they get into commercial financing, anything over 5 units, it's like, I don't know, it's like la la land for people. They think it's something that's foreign and that's alien. And Jake and I are here to tell you, just like you, it's not really that much difference. It's like a few more numbers. And as Grant Cardone says, if you can do 10 units, you can do 100 units. So,
right.
Give it.
It's just about. Yeah, it's really just about mindset. And the way that this particular deal came about was I moved to LA, wanted to started networking with more people, wanted to get my syndication brand, whatever you want to call it, out there. So I started a networking event here in LA, just at a pub, Thursday nights once a month. And a gentleman came to that particular networking event. We met, and he was working as an asset manager for a multifamily company in LA, but was doing student housing across the United States. Anyway, he had great deal flow, and he's like, "Look, I want to break out of this particular business." And I said, "So I want to break out of engineering, blah blah blah." And my mentor at the time had said, "Look, if we find a cracking deal, I'll help you raise capital on it." So one thing led to another. We underwrote a few deals together. I finally presented this deal to my mentor, and we sort of somehow got it done. It was nervous. We got it over the line, but it was a lot of investors involved, and the financing involved, and all that sort of stuff was very not hairy, but we learned a ton of information about how to just get these things done. About deal syndicate, about deal sponsors, about understanding the financing behind it, and how at the last minute the bank can just tweak something, and that just causes you to, you're at their beck and call, and it can be tough sometimes. But you get deal number 1 done, deal number 2 becomes easier, deal number 3 becomes even easier than that, and deal number 4, 5, 6, and so on. So as I said earlier, you don't get to deal number 15 without doing deal number 1. So it was really eye opening. But I loved every single minute of it, and have been just leaps and bounds, been growing and learning so much more.
How do you underwrite your deals? What are you looking for in a deal?
So we're looking for, it has to be value add. And there's obviously a scale of value add. Some of your listeners will be saying, well, there's you can have a vacancy or an occupancy of 50%, and that's to me that's no. We're talking like maybe a vacancy of 10 to 15%. The rents are under market value. We can go in there, do up the apartments, and then increase the rents. That's the major sort of thing we look for in Class C neighborhoods. Looking for a good cash on cash return for everyone involved in the double digits, and a solid IRR in the high teens. So that's the rough criteria of what I look for when we underwrite a property.
And Reed, what is your investment strategy? Is it to buy and hold? Is it to refi out? Or is it to pay the partners, get rid of them, hold the property? What are you thinking in the beginning? Because I think the exit strategy is important for all the listeners, because we all want to buy, but we have to have an end in mind. So,
Sure. Yeah. So the major strategy for us right now is to buy, to reposition, and then refi some of the equity out of it. But the partners would still be having, or the investors will still have their equity position in the deal. They just have that some of their capital is paid back to them originally, and then we will hold it for between 5 to 6 years, projecting when the equity has multiplied by a certain period of, by a multiplier. By no means is that a crystal ball. Anything can happen, but we're sort of looking between 5 to 6 years. The reason that is the period of time is because for your listeners out there, when you start raising capital, people who say, "Oh, well, if you've got a cracking deal, your capital's going to come, crawling to you." Well, I said to those people, "Well, you've never bloody raised a penny in your life." So, getting your first deal done is very, very tough, and having an exit strategy and a finish line in place is very good for the investors mentally. They're like, "Okay, I've never invested with you, but I kind of like this deal. I'm a little bit on the fence." If you can say, "Well, look, come year 5 or year 6, we're looking to sell the property and you'll get your investment back plus, whatever we're projecting." So that's very powerful for those first-time investors and for first-time syndicators trying to get a deal over the line.
Reed, can you walk us through how you raise capital, raise private money for these deals? Because a lot of our listeners, that's their first step is, where do I find the money? And Jake and I haven't had that problem yet. We've had partners and ourselves bring in money, and we've been able to refi a property, pull that money out, and go to the next one.
Sure.
I think it'd be really powerful.
That's what I'm saying. I'm calling them stack of cash, Reed. That's what we're going to start calling over here.
Stack of cash. Money bags, hey? Well, so you guys know, I've looked at your rise over the last couple of years. I've checked out your website. You've got a really awesome brand. And at the end of the day, people are going to invest not so much in your deal, but in you as the syndicator. As you're starting out, no one is just born with 10 years worth of experience. So aligning yourself with people like yourselves, Jake and Gino, my mentor, I was able to leverage other people's skills and ability to get me in the game. And yes, you may not make a ton of money on your first deal because you just, maybe it's you get a small portion of the GP for raising, I don't know, $200,000 or $300,000, whatever it might be, which is still a great sum of money, but it's getting yourself in the game. And then that's going to make deal 2 come easier, and it's going to make deal 3 come easier. I also help people in my everyday business just start raising capital from, putting investment summaries together, to understanding your personal brand, to doing a podcast like this, really taking time and emphasis on your personal content and branding is very, very important for me right now. And it's slowly building a snowball effect over a period of time.
Do you ever see yourself investing by yourself, or you're always going to stay with your partners, getting to smaller deals, bigger deals? What do you see yourself going forward?
I think right now with with the way the market is, larger multifamily deals, the economy of scale make more sense for me. I am seeing through my network, different asset classes which are very attractive: self-storage units, mobile home parks, and the way I'm trying to position myself is is that I don't know what's coming around the corner in terms of whatever the economic, financial, whatever, doom coming or not, whether you believe that or not. But if you're in a position where you can pivot to another asset or be across a couple of asset classes, diversification is very, very awesome in my books, and that means that you can then ride out any sort of financial instability in the future, if that is to arise. So, yeah.
So what cities are you looking for? What criteria do you look for in a city or in a market to invest in?
Yep, I like to keep it. Population needs to be at least 500,000. I do really want to go in anything less than 500,000, maybe 300 if it's a growing city. I definitely look to have a minimum of 3 employers, major employers. So I don't just want it to be all oil, I don't just want it to be all military, or I don't just want it to be all just the university. It needs to have 3 major employers. There needs to be a relatively stable, a good GDP growth across the city. There needs to be rents need to be increasing over a period of time, and population needs to be growing, slightly, because you obviously don't want population decreasing. You want people to be moving to a particular area for jobs or for a better lifestyle or better weather, whatever it might be. You just want to look at those sort of trends, and they're the rough sort of 5 or 6 criteria that I look for when I'm analyzing a market.
And what markets are you in right now currently? What fits those parameters?
Yeah, so our first deal we did was in Houston, Texas. Now everyone would say, "Oh, Houston, the oil and blah blah blah." But we picked up the deal at a song. So it was you make money when you buy, not when you sell. So we picked up the deal really well. These last two deals have been in Dallas, Texas. I'm about to fly to Kansas City on Friday to check out a few deals out there. And I've been involved in Philadelphia and obviously Syracuse. So they're the major markets, but I like so many other more markets. I like Knoxville, Tennessee, where you guys are in. I also like Raleigh, North Carolina. I like Richmond, Virginia a lot as well. I like Denver, Colorado, obviously, Kansas City. And I've also started looking at Albuquerque, New Mexico. So there's a few different places that I'm starting to see, particularly that I'm on the West Coast. So it's just sort of more markets I can fly to within 2 or 3 hours rather than doing the whole trip across the country.
So talk to me about Kansas City. I've got a lot of students talking about Kansas City, and I'm trying to grapple that market, see how that market is. What do you like about that market?
What do I like about that market? I think it's got a very emerging downtown, which is important for me. It has had a very good resurgence since the recession through flipping and through those sort of old rustic type of architecture of the downtown that is now transforming it into a bit of more of a hipster yuppie sort of scene. And that's what I like about it. I also like that it's got a good mix of, you say, for example, Philadelphia doesn't have, you couldn't go out and buy 300 units or 400 units in Philadelphia. Like the scale isn't there. Like a tier 2 city like Kansas City, there's more of that sort of inventory on the market. And I like it ticks all my boxes. It's got good, strong employment. It's got population is growing. Google moved there recently or whenever it was. It's got a good university. It's got good sporting teams. There's just the whole macro of it I like. And at the end of the day, I've got a team set up out there that I can leverage their abilities in that market for property managers, for local attorneys, for anyone, GCs, general contractors. And that is very powerful for me, being an interstate investor, is to have a good, solid team on the ground to say, okay, I can trust you. We've done business in the past, or we've maybe not done business together in Kansas City, but maybe in another deal. Let's go out and check out your market, check out your team. And I'm using this weekend as a bit of a vetting process to make sure that it ticks all my boxes. So yeah.
I'm glad you mentioned teams, because that was my next question. How do you go about setting up teams? What team members for you are important, and how do you walk us through that whole process?
Yeah, so first and foremost, what I have found in the last 6 to 12 months is, because I am Australian, it's very, very important to have a very good team on the ground in any city, whether it be you might be investing in across the street or across the city or across the country or even across the world. I do help a lot of international investors start buying US real estate, from single family properties to now investing in my deals. And I always say to them that you need to have good boots on the ground. Your team on the ground needs to be a cracking team. I like to say property management is the number one key person in any team. The second key person would be having a good general contractor who can help reposition the property. There may be one in the same team, a good local attorney and a good title company, and also having a good relationship with a local bank. Being an internet, I found when I first did my deal in Syracuse, New York, the period of 12 months where I purchased that deal where I had zero credit, I'd made relationships with a local credit union, not a big, massive, big six Bank of America, but just a small credit union. And I opened up a bank account with them. I deposited checks monthly, and they saw that I was slowly building a good little rental portfolio through my own cash. So when I came to them and say, "Hey, can I refi some money?" they were like, "Sure thing. We've got evidence of it," and that was really powerful. So there's sort of the 5 team members that I would like to always have in each and every market.
How do you find a good property manager? Because a lot of people ask us that question. We self-manage our portfolio. We haven't grown yet out of our market, so...
Yeah, so on the larger deals, we have had our general also bring the property management. So he is then essentially invested in the deal. The property manager is essentially invested in the deal. So that's on the last major big deals. That's what we've done, and that's we're going to continue to do that as we grow in our net worth. For all those other people out there who don't have the luxury of bringing in a property manager to partner, I definitely think you should be looking at asking the questions of like, well, what happens when the eviction? What happens? Walk me through the process of your eviction. If someone doesn't pay by the 12th of the month, what are you doing? How many properties are you currently managing? You obviously don't want to hear them that they're managing 10,000 properties, because if you have a 20 unit property, it's going to be a little bit of a small fry. So you want to be sort of in the range of between 500 to 600 units if you're going with a multifamily property manager. Understanding the eviction laws in your state is very, very important, and making sure that they're just on it. You can tell if someone's a professional or not. And unfortunately, Jake and Gino, I'm sure you've had your fair share of unprofessional people, and I'm a huge fan of if someone doesn't pick up the phone, if someone doesn't get back to me with an email, if they're not really hungry for my business, then maybe I need to go see someone else, because this is 2016. I can jump on Bigger Pockets, I can jump on the internet, and I can find out if you're going to be worth your weight in gold or not very, very quickly.
Mm-hmm. I agree with that. Let me walk back a step. I want to ask you, what was the first market you invested in, first big deal that you had?
Houston, Texas.
Houston, Texas. So I want the listeners out there to really pay attention to this. You have to focus on a market. See, Reed's got a lot of experience. He's in multiple markets now. He's in Kansas City, so he's building teams. But I think what all listeners really have to do is they have to focus on one market. Try to build your team in one market. Try to go after all the deals in one market, because the deals can be great, but if it's not market driven, and don't spread out. If you don't have a deal in that Houston market, don't be jumping to Cincinnati, Ohio, because you think that's a great market. Try to focus on one market, and then after that, you've got a couple deals. Then I'll give you the ability, or what's it called? I'll allow you to go look at other markets, because I think a lot of investors get hairy scared. They look at all these great deals, especially guys from California. They're looking at 8 and 9 caps, when in California you're 2 and 3, but they don't understand that you really have to focus and really build that team. And if you don't build that team, the deal could be the best deal in the world. You buy it, but who's going to run it? Who's going to take care of it for you? So I think that's the first step. What you did is go down there, pick the market, and then crush it on that market. Let me ask you, what's the best real estate investing advice or tip?
The best real estate investing advice and tip that I have, I think the best one is to never give up, because a lot of people get involved, particularly in multifamily, with the market the way it is right now. Just, they get to, there's so many, as you just said, there's very shiny objects in your room. The Cincinnati, Ohio is going great. Columbus is doing well. I want to go down to Knoxville. I want to go over here. It's like, guys, whoa, chill out. You just got to get deal one done. Don't worry about, the Lamborghini you want to be driving in 20 years' time. Talk about, let's just get deal number one done. And no one will take you seriously until you get deal number one done. And I don't care if it's a fourplex or if it's even a duplex. Just get your feet wet. That's all you got to do. Now, make sure you're surrounding yourself with credible people. You're getting the right advice, and you're educating yourself. Don't just go out there and think you can do it all by yourself, because you're not going to be able to do it. And the last piece of advice is definitely get a mentor. I'm hugely massive. My mentors helped me a lot. It's evolved into different mentors over the years, but mentors are very key.
All right.
I agree. So you've been doing really well. You've been growing the portfolio. What has been the most important habit that you've done on a weekly, monthly basis to enable you to get to this point in your real estate investing career?
I think it's more checking in on your goals, making sure that you're really focused and being laser focused on what goal that is. Now, it might just be as simple as, for this month, the month of September, analyze 20 deals. That might be the goal for the month. And for some of your listeners out there who are just getting started, I'm going to go 4 real estate networking events this month, and I'm going to meet, and I want to aim to meet 30 new people. Whatever the goal is, be super laser focused on it, and then I'm a huge fan of doing little steps or little goals to get to the big goals. Because if you're going to do deal number 1 by the end of the year, or deal number 1 by middle of next year, what are the smaller steps you've got to take it down? You've got to break it down into to help you achieve that big goal, and that's very, very important. And once you've done those small steps, look back and say, okay, I've done exactly what I said I was going to do. I can pat myself on the back. So always never give up, and always be setting yourself goals, or what I like to call mini goals, to help you get to that bigger, maybe it's the first deal, or maybe it's to raise $100,000 or $500,000, whatever it might be.
Yeah, so you're going to basically chunk it down. And this goes back to what you just said. So you may have a larger goal of, I want to buy 50 units this year in the Kansas City market. Right. Stay focused on that Kansas City market. Start by meeting brokers. Start looking at deals. Start analyzing them, and just keep chunking it down. And don't go off into, I'm going to go to Tampa. Now I'm going to go to this market or that. Focus on the market, and then little wins every week add up to big things. And I think that's spot on.
Yep, 100%.
So you've been in real estate for a handful of years now. What has been the biggest mistake you've made in the real estate business as an investor?
The biggest mistake would be on one of my flip deals in Philadelphia was the vetting of the general contractor, which we still made money, but it was just more the fact that it didn't go as well as we thought. He essentially didn't get inspections done by the city, and it was, as a manager, it was my fault for not seeing that. That caused us a lot of headache. So that was sort of really understanding that team, and that really then drove. And this was going back a couple of years, but when I was living in New York City, it's only a short drive, but still you weren't there, and it just really got to the point of flipping a house. Is this really worth my time? Blah 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 blah, and really vetting. And if I'd done a simple Google search to see that he was from out of state, or he'd come from Richmond, Virginia, and that he'd had a bit of trouble in Richmond, I would have seen that. And he's gone on to screw up a couple of people. But anyway, I'm not going to get into it. It was just more the outcome of that particular deal was you have to be making sure you're working with credible people. So
Gino always likes to talk about starting small with like a duplex or a 20 unit or something, so you can kind of learn the business. And when you make mistakes on a small deal, it's a small mistake. Versus if you're into 150 units on your first one, you make that mistake and kind of stings a little bit more. So, but that's pretty good. And not all the time. It doesn't. These mistakes they don't cripple you, but it's good to learn them in the beginning. That way you don't make that same mistake twice.
100%.
So you talked about Rich Dad Poor Dad. What other real estate books do you like for people getting into the game?
I really liked, and this was so for all the new investors out there. When I was in Australia, I was getting pitched by these gurus for 10, 15, 20,000 bucks for mentorship, stuff that I was like, wow, this is okay. It's a little bit of money. When I first moved to the United States, all that information that they were pitching to me to creative financing and how to choose a market and blah, blah, blah was readily available for free. And one of the books I really liked from just understanding how everything worked and finding a deal was the book Flip, F-L-I-P, with a green cover. It just broke it down for me in terms of, okay, how do I choose the neighborhood? How do I choose, what's a bird dog? How do I get yellow letters? And they're the sort of stuff that regardless if you're in single family or you're in multifamily, finding an off-market deal was just, it's key. And that was another little book that I got a lot of value out of.
Gino, you know about that one?
Never heard of it, but just wrote it down.
I was going to check it out. You got the library over there. So what's been your best deal and why?
The best deal and why would obviously be my first deal. Even if it was the duplex upstate New York one. Just getting the first one over the line was really a goal that I'd set myself, and I'd set up some mini goals to get there. Okay, I wanted to get a duplex done by the end of, I think it was end of 2000 or middle of 2012. So I needed to have visited the market 3 or 4 times. I needed to have interviewed a couple of property managers. I needed to have interviewed a couple of realtors and just get my feel for the boots on the ground. And because it was within driving distance of New York City, I could get up there a few weekends between when I was working. So those little mini goals helped me got to the point of having my first duplex, and that was really, really important for me.
Yeah, and we were speaking to Jay Scott last week, and he was making the point that he's never met an investor that's only done one deal. They've either sat on the sidelines and done nothing, or they've done multiple deals. So even though you've done deals much larger than that duplex in Syracuse, that enabled you and gave you the credibility to roll up into what you're doing now. So that's very, very important.
And not necessarily just credibility, but the mindset of I can do this.
Yeah.
I've moved across the world, and all your listeners out there, if I can move from Australia, have a job, I didn't even have a job when I went to New York City. I found one, and then start buying real estate because I just knew that it was going to eventually be able to get me out of the rat race. That was my major goal. Okay, to escape the rat race. Okay, work backwards. How do you get to that? Okay, I've got to get X amount of deals done. Okay, how do I get to deal number 1? Okay, I've got to do X, Y, Z. That is very, very important. If I can do it, anyone can do it. So please, if you're listening out there, don't be sitting on the fence. Get to educate yourself and just get involved.
What year did you do the Syracuse duplex deal? What year was that?
2012.
So, I mean, we're talking, 4 years?
Yep.
So,
and then I roll.
Yeah, and the only reason I'm making that point is for the listeners out there, guys, this isn't going to take you 20 years. This doesn't have to take you 20 years to, get financial independence and get into the real estate game and really start accumulating wealth, just for what it's worth. What deal are you excited about right now?
I'm excited about a new deal that we're doing in Dallas, Texas. It's called Midtown. It's 296 units. I'm excited about that. I'm excited about going out and checking the Kansas City market out. I've been there once before. I've analyzed the hell out of it. I want to get out there and have some good barbecue and meet the team and check out some local deals. That's what I'm excited about. So yeah, I don't know. I'm also excited about the brand that I'm building and my podcast, and I'm also releasing a book at the beginning of next year. So it's all coming around really nicely, and I'm just enjoying the journey as well, because people always say that they want to get to some point, but enjoy the journey while you're on the way, because you look back and you'll say, okay, it's all over. What's next?
Mm-hmm. I agree.
Just got to be doing it. Well, very good. Gino, that's it for me. You all set?
I am all set. I just want to know, out to listeners, how they can get a hold of you, any websites, any links that you can offer for us.
Sure thing. You can hit me up at Reed at rsnpropertygroup.com. You can head over to rsnpropertygroup.com, which is R for Roger, S for Sam, N for Nancy. I do have a podcast there that is also, it's more geared towards international investors, because I am international. I help educate those international investors about just what's an LLC and how do you find a good market. So I'm head over there. If you ever are in the Los Angeles area, please hit me up and just shoot me. I love meeting up for lunch, having a beer, having a coffee, whatever it might be. Just hit me up at reed at rsnpropertygroup.com.
Yeah, and guys, just to summarize a little bit, I think a few of the key takeaways from the show today. Number one, get a mentor. Obviously, that helped Reed out tremendously, and I loved what you said in the beginning. You said we're all in for cash flow. You're buying for cash flow. What it's doing today, how we're going to grow the NOI, force the appreciation. That's same mindset for Jake and Gino here. And the key, I think that if there's an overarching theme to the show, is get the first deal done, get in the game, and let it snowball from there. So,
100%. Very well done.
Reed, thank you for your time.
Thanks, Reed. Have a
Thanks,
great
guys.
day. Right?
Cheers, boys.
Okay, that's going to do it for today. If you found value in this episode, please don't forget to leave us a review on iTunes. We really appreciate it. Also, if you'd like to speak with us, we are now doing 2 30-minute strategy sessions every Friday. You can sign up for these at jakeandgino.com. This has been another episode of the Wheelbarrow Profits Podcast, the only show that teaches that it's education times action that equals success. I'm Jake, and he's Gino. Over and out.
We trust that you enjoy the Wheelbarrow Profits Podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.